All right, what's going on, guys? So we don't get too far into the weeds on this. We're just gonna mark. I'm gonna take these off. We're just gonna mark liquidity levels, right? Um, this is just kind of top-down analysis that I have. This is our rollover range. We don't need this, right? We're just gonna mark liquidity levels. We will keep this off. So this is the daily chart, liquidity levels, right? We're gonna look. Obviously, we have a long-term liquidity levels up here, right? This is just typical price action type stuff, right? We got liquidity here, and we have liquidity down here, right? So now that we have a range, we have short-term liquidity right here, right? Just mark your swings off. Now that we made a high above here, we have liquidity down here. We also have, let's see, this is the rollover range. We're going to leave this alone. But we have liquidity below here. This was the short-term liquidity that we were watching. We did break it, right? Long-term, short-term. I say long-term because this is the trend down. And then short-term because now we're trending up, trending down, trending up. And every time we make these higher highs, higher lows, etc., we're creating levels of liquidity. That's why I look at my traps, right? That's why I look at that trap pattern where we come up, come down, up, break below this swing, which is technically a level of liquidity. And I say that because there's stop losses here. The buyers and the sellers are trying to stop out those buyers and run it short, but when it stops, we get that move higher, right? So what I'm getting at is once we broke above this wick here, once we broke above this daily wick here, we hit a level of liquidity. And when we hit a level of liquidity, we're going to have buyers trying to get breakout trades up. And then we're going to have those shorts that we're shorting in this area. They are going to try to, or I'm sorry, all the shorts that we're shorting in this area here, they're going to get stopped out, which gives us that move up, right? So I take that into consideration, knowing that if we don't get the full follow through, it was just a level of liquidity that we're grabbing, right? So we grabbed the liquidity. Now we know that this level here, 2537-ish on the daily chart, is a level of liquidity that we grabbed above, and we're still continuing bullish though. And then let's zoom in like on a 1 minute chart, 500 tick chart, all that, right? So we'll go to the 5 minute chart here. On the 5 minute chart, we have this. Let's mark off our swings, right? This is our swing here, and we have, this isn't really, this is like a shorter term because we made hot. Look at our move down, right? We have a move down, pull back, move down. So we already broke this one on the way down. We pull back to it, tried to go down further, which we couldn't, which signaled the bullish move up. Now we're watching these levels here. We're watching this level. Just mark off your swings. Now anytime liquidity is taken, you look for the opposite side of the liquidity if you get this the right type of pattern. Now also, this level up here, and this is where you got to take it into consideration. We broke and rallied. We created a new level of liquidity up here, right? This level here is the same as this level here, okay? So the top wick today is the top wick there. So now that we broke a longer term on a daily, we broke a daily level of liquidity, which is right here. Yes, it's shorter term. This is the longer terms down here. These are longer term levels, but we're looking at a daily chart. We broke a daily liquidity level. This is a daily. This is going to have way more daily liquidity. It's going to have way more than you know, the 5 minute, the 1 minute, the 15, and all the tick charts. There's going to be way more liquidity up here. That's why we got that nice little run up. But anytime we break a higher time frame, liquidity, we look for a pullback to short-term liquidity, right? So we're going to break a higher time frame liquidity. We look for a pullback to short-term liquidity. And then once we get the pullback to short-term, then we look for anything left over on the chart, as in crumbs, right? I do price action, but there's going to be crumbs with different strategies, right? You're going to have, and that's pretty much all I was looking for. Look for crumbs. And when I say crumbs, you're going to look for everything else that ends up playing out on strategies. This one, and I don't like trading them, but it was like a breakdown retest, or what I call a BORT. So I look for BORTs. Part of BORTs are like fair value gaps, right? And I don't trade fair value gaps. I don't trade ICT like that. But I look for a BORT, a breakout or a breakdown retest. So we break out of the higher time frame, which is right here. We broke this level 534, and this is 530. Let's see if I can put that on the chart. There we go. This is the daily liquidity level. Daily liquidity level, right? So this is a higher time frame liquidity level that we broke above today. And we established a new liquidity level. All we're marking off is swings, right? So now that we know that we have a daily liquidity level that was broken today, and what happened? We got those you know, you might have had some of those stops, and then bam, we had a nice push up. Those are those stops. Those are those breakout buyers and those sellers that got short. They all stopped out, and we came up and we hit a new level up here. Pull back. Now we're marking our swings. Okay, we came down here. We retested. Breakout, retest. Now we continue higher. But in order for us to continue higher, we need to sweep some liquidity levels and then continue, right? Our next liquidity level that we're looking to break is here. That's this, right? So start thinking like a seller. Start thinking like a seller. Sellers came in, and then buyers are trying to bring this price up. All we're doing is we're looking for those crumbs. Look for those crumbs. Where did the sellers come in? Okay, so if you're one of those that trades some sort of fair value gap type situation, here's your fair value gap. You're looking for that BORT, that breakdown retest or breakout retest. So if you're looking here, this is a fair value gap. If you're one of those that likes to trade those, I love when fair value gaps match up to my breakdown retest levels. So I'm going to copy this zone here because we came down, right? Broke here, we held. So this is where the sellers are looking in. This is where the good price for the sellers to come in. So I'm trying to stay above this 18 level to continue higher. And then once we then look for this level up here at the 49-ish. So we're going to copy this fair value gap area, and we're going to copy it to like a 1 minute chart. So if you look on a 1 minute chart, because I know a lot of you guys use time charts and not tick charts. So this is the same thing. We're looking at the same thing on the 1 minute chart. Here is our level. Is this our level? Nope. Let's put where's our 5 minute chart? Here's our daily liquidity level. Let's see if I can get it on there. There you go, perfect. There's our daily liquidity level. We're just copying and pasting all these things from my 5 minute chart. So here we go. We got our liquidity level up there. don't need that. So this is just everything from my 5-minute chart. I'm just putting on my minute chart. So a lot of you guys use minute charts, right? So now we know we have a 5-minute fair value gap right here. If you look at the area where sellers actually stepped in, and if you look where the sellers actually stepped in, right? Seller stepped in up here, we bounced, and then we created a little bit of a zone here, right? A little bit of a zone in this level. See that little zone? We held, and then we broke down, right? Where's the first breakdown? The first breakdown is to this level here. We come up, and then we slam down. So this is going to be our BORT. When I say BORT, the breakout retest, this is the last spot that buyers tried holding. See that wick there on the 1-minute chart? This candle here, this is the BORT. This is when I put on my chart, BORT. That's our breakout or breakdown retest level. We also have, for those that like trading fair value gaps, a fair value gap that I found on the 5-minute chart. So if sellers were going to look for the best place for them to add short, they're not adding down here at the daily liquidity level. They're not adding here. The smarter shorts are going to come in at something which, I guess some would call, I don't know what they call it, but this is the best spot. This is where the shorts actually came in. That's where the aggression happened. This here is, profit taking, pull back, consolidate, and then continue. That was where the bulls couldn't continue. So until we break above and stay above, and look on your higher time frame charts, like your 5-minute chart, if you're one of those types of traders, if we can close above here, once we actually close above this level, that's where I'm looking to hold. And then see if we can continue. But where's the next target? The next target is this swing. So what I would expect, if we do break above here, we hold, break this, we might get that little pullback. And then we can continue. But don't chase. 18 level, you can see it. Clear as day, fair value gap for those that like trading those. But it's also, and what I was watching, is my BORT. Now, if we take this and I put it onto my tick charts, which I was watching, let's just change this to a 500 tick. See that? That's the breakdown retest. That's the BORT. Strong move up, pull back. We made an attempt, couldn't do it. We consolidated. Sellers pushed down. Last attempt by the buyers. The breakout retest and the breakdown retest is the last attempt. So as you can see, this is the last attempt. See that wick down? Consolidated. The buyers were trying. Sellers were holding them off. Came down. There's our wick. Last attempt by the buyers failed. That was that level. That was why 18 was so important. Multiple confluences for different trading strategies. 1, price action, that I use my breakout, breakdown, retest levels. 2, we kept sweeping different levels of liquidity on higher time frames, which we did the daily. So we're looking for those. Now we're looking for shorter term liquidity levels to get taken out, which we took out here, right? Made that new high, came down, pull back. This is a shorter term liquidity level, which we took out. Now we can go ahead and go higher because this is more of a consolidation. But not to get too far in the weeds. It's a fair value gap for those that like to trade that. It's a breakdown retest, and it was after our high of the day, that we came up, made a new high on this entire move up. We pulled up, consolidated, sellers made a small little attempt down. Buyers' last attempt, dump. That's why. This level is going to be the key level for sellers to hold off. And if they can hold off, where are they looking? If sellers can hold off here, we're just looking for these swings here, right? Look for this swing. Look for this. Look for these levels on the way down. That's it. Simple enough. Basic price action on these types of days. Ultimately, you know, they're going to want to take down these levels here. But for now, we're going to look at the shorter term levels to keep targets into perspective because we're not getting a lot of momentum. But that's it. So as you can see, here we are coming back up into this level, rejecting. You can see the sellers there. Go to your 1 minute charts for you 1 minute traders. Let's see if we can see those sellers sitting there. Look at that. You can see the sellers. They kept fighting it, fighting it, fighting it. Okay, seeing if we can get up there. Nope. Sellers are too strong. We came back down. Ticking right up to it. So from here, I'm looking for this level here. I'm looking for this liquidity. And I look for this liquidity to get taken out prior to moving higher. And with that being said, that's when I go over to Bookmap, right? I go over to Bookmap and I start watching these levels. See if I can get my chart over. Once you have these swings, look for these levels, right? What are we looking for? We are looking for $578, right? So let's look at $578 on Bookmap. See if we can find any liquidity there. Correlate these to your charts. $578. Not seeing anything on $578. But as price retraces and we get lower down there, let's see if we can find something there at about $578. If we start seeing liquidity popping up on Bookmap at $578, that's going to give me all the reason in the world that that's where we're going. We're pulling back. We're at 600, 6,000. So consolidate here and push higher. We can always do that. But that's the reason. Hopefully this isn't too long and I'm not too far in the weeds on this one.